Obviously this year so far we've seen record issuance. We're on track for another 200 billion of issuance this year. Is that starting to become a problem? Are we starting to see spread widening?
Well, I mean, we are definitely seeing spread widening. Supply is definitely one reason. You see that depending on country and issuer level, you see some investors just saying we are full in line, so they're trying to switch. But given the general widening, of course, some of the traders are not willing to show good prices to get inventory on board. So yeah, that's definitely driving the market. However, given the spreads that we see and as well the relative value that covered bonds are offering, I believe it's still attractive for investors, and therefore I'm still confident for the future, still with this kind of supply that we're seeing currently.
A lot of the supply has been characterized by very short duration, 3 and 5 years. How much longer can that go on before it starts to become a problem for issuers?
That's a good question. I mean, at the end of the day, as an issuer, you have a couple of alternatives. Of course, you have the benchmark funding, which at the moment is more at the short end, or well, maximum at the belly of the curve. However, given that a lot of issuers still have the possibility to do some ALM management through private placements, I'm not that concerned, to be honest. And I believe if we'll reach a certain level and get less volatility in the interest rate market, I'm very positive that we'll see longer tenors again. So I'm not worried at all. Of course, if that would take for a couple of years still, then we could have a problem. But I don't see this risk at the moment, to be honest.
We always focus on the benchmark issues, but yeah, private placements and sub-benchmark deals. Are we seeing more of those in common with the increase in benchmark issuance?
That's a good question. I mean, sub-benchmark, it's definitely something where smaller issuers are trying to get traction in the market. So I believe we'll see more sub-benchmark as well in the future. On the private placement side, there's really the difficulty that investors in these kind of markets, they would like to be paid for this kind of illiquidity. From the issuer perspective, of course, that's not very attractive. So, however, I believe if you're thinking a bit out of scope and looking then to longer tenors, maybe there might be an option where investors and issuers will meet at the end of the day. So that's something which could help in the future going on.
Of course, we are a rates market. We're not a credit market. We've got all these protections in place. But across Europe, more and more consumers are struggling with raising mortgage payments and cost of living. Are we going to start to see credit differentiation between different countries or different issuers?
I think we are seeing it already. I mean, if you're looking back 2 or 3 years ago, prices on a country level on covered bonds for the same jurisdiction were pretty close to each other. We are seeing already that investors are differentiating. For example, if you look to the German fund brief, what kind of business model is there? Is it a monoliner only focused on commercial real estate? Is it a kind of universal bank with different business fields? I think we're seeing already a kind of differentiation within countries, and I think this will continue as well in the future.